So when is the stock market going to crash, or has it already? Is it going to get better, or is it going to get worse? Coming up next. Warning, before you actually listen to any of the content of this video, you need to understand that I have no money in the stock market. It's not that I don't believe in it, it's just that I have superior ways of making money. However, a lot of my clients, I've been big in the game of real estate for such a long time. I won my financial independence back when I was 26, and now I've taken on partners all over the globe, and we're out there buying up the whole world. We're doing a real estate strategy and we're crushing it, but many of them have assets in the stock market. So they asked me to say, Kris, can you actually make a video about what's going on in the stock market? Some of you know that just recently here in November, we have had the big downturn crash of the stock market, and it's been hurting some people's portfolios, including my partners. Some of them just got their money out barely in time, but a lot of people already took a 20% bath. And a lot of people want to know, oh my gosh, is it going to come right back up? Or is it going to go down again? Or what's going to happen next? And the reality is that I don't know. Nobody knows. But you know what we do have? We have cycles. And if you understand the cycle, then you understand this. Real estate moves this way, the stock market moves this way, but they move on different cycles. Okay, so if you want to understand the stock market, understand that it works predominantly in an 8-year cycle. Right now, we were about a year overdue. We were into the 9th year of this last cycle. And what you usually end up get is you can break it up into basically 3 core components. This phase right here, which is generally 3 years, is what's called catch up. The market had come down, and so now we need to rebuild the lost value. And then after that, you usually get 3 years of a cycle that I just call boring, very sophisticated terminology. And then after that, you get another cycle, and this is your cycle of growth. Now, here's the interesting thing about the stock market, because I want you to understand that you're now locked into a journey for the next 3 years if you're hoping that the stock market will come back. It will. After its crash, it usually takes about 3 years to stabilize. So I want you to understand that right now, the market has just done this really big crash, and you're like, will it pop right back up? Will it go back up to what it is before? On average, it takes about 3 years. So what that means is you're going to see it decline, and you're going to see it bottom out, and then you're going to see it work its way back up. And what you're going to lose during that period of time is time. You're going to lose 3 years just to get back to even Steven. From even Steven, because you can see that, look at this. These parts people get crazy excited about, but you shouldn't. The only time you should get excited about that is if you're a day trader and you plan on beating the market and getting out, but no one's that smart. No one knows how to do that. Which means that if you're in the stock market, you're signed up for a 30-year journey because there is no way to really truly time the market. My friends that were just about to pull a bunch of money out to go into real estate said, but Kris, every day we're making X hundreds of dollars. And I'm like, you're thinking like day traders. You understand that all the growth that you're getting right now, you're about to lose. You're going to see it climb and climb and climb, and you're going to feel like you're having all these amazing back-to-back days. Then you're going to lose it all, and for the next 3 years, you're going to cry until you get back to even, and you're like, okay, well, that's going to be boring. And then after that, you're going to have this another big cycle. And all of that on the S&P 500, top 500 stocks, blue chips that are trading out there, that is producing just shy of 10% a year growth. But that's not in a year. That's what you average after you take this entire 8-year cycle into account and you stack cycle, 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 cycle. This is a 30-year plan. The reason why I love real estate is because in real estate, I consistently do a specific strategy that earns me on average on any given year over 20% per annum. And you'd say, well, Kris, I can see why you would like that. Real estate is doing 20%. That's double what the stock market's doing. That's not really why I like it. I like it because of the compounding effect. Albert Einstein said that the smartest thing people can financially do, the smartest financial instrument that's ever been invented is compound interest. And so imagine for just a moment that you knew how to invest in real estate and earn 20% a year. Well, let's actually do my deals. When I take on my financial partners that bring money to the table and we do deals together, I typically don't touch a deal unless it's got 25% ROI. Let's do the math on that. In 8 years, you might be doing 10% on the stock market, but there's a very, very different thing happening in my world of real estate. In real estate, when I'm doing a deal, it's actually on an exponential curve, because if I'm doing a deal and I'm earning 25%, every 5 years, I'm doubling my ROI. I'm not going to hold the same home on average. That home is I'm going to actually liquidate it, and I'm going to take the growth and the original money, and I'm going to buy twice as much. So if I bought, let's just say, one home earning 25% here, then what I'm going to do in 5 years is I'm going to turn it into 2 homes on the same dollars. I'm essentially earning 50%. And if I go another 5 years, that 50% becomes what? It becomes 100%. So I've made millions of dollars, but I've put very little money, period, into real estate whatsoever because I know how to compound and grow it. So the stock market might be averaging 10%, but when I compound my real estate in 10 years, I expect to be earning what? Not 10%. I expect to be earning 100% on that money. Jay Bichet was a French economist, and he basically told people and said, creating wealth is simple. It's nothing more than moving from areas of low yield to areas of high yield. That's it. 20% isn't better than 10%. If my real estate does 20 or 30%, the stock market does 10, it doesn't mean that it's 2 or 3 times better. You can't even compare it. You can put money in the stock market as a tool of diversification. For me, I personally invest in the companies themselves and usually private companies, so it's a version of maybe thinking in terms of stocks. But for me, I've just tried again and again and again. Every asset class will lose 100% of its value is what it's going to seem in a lifetime. So you've got to be super careful about your strategy. Yes, you've got to diversify. I've just learned how to do it in real estate successfully enough that I can produce these returns over and over and over again. So here's what I want to say. For those of you watching this video like, the stock market, is it going to come back? Has it gone down? Is it going to go down further? Dude, nobody knows, but I'm going to tell you right now that it's triggered an event where it's likely going to stay in that position for probably 3 years before you even just get your money back. One of the things you need to ask yourself is, do I take a 20% bath or a 30% bath, put it in real estate, recuperate all that money in the next 3 years while the stock market's just trying to work its way back up? And then when the stock market's doing its boring thing, we're shooting through the air on real estate. And then when real estate has its 2 or 3 year stint of high growth, which we know it's going to lose, we just avoid all that by being in the game of real estate. Those are some of my views on why I'm specifically in real estate. I'm a statistician. I'm not emotional about this stuff. I actually just love the numbers. I love the science of it. And stock market is it's a very real way for people to invest and make money. For me, the stock market really doing a net average of 5, 6, 7% is not enough in 40 working years to create real retirement. So if you want a 40-year broken plan, the stock market's going to be a good place to put your money. If you are not in a financial position where you're making loads of money and socking away loads of money, then you really should consider the game of real estate. And if you want to know how to do that in the most intelligent way, I've done over 3,000 deals, and everything I've learned is one click away. The click below in the description will actually share with you where I'm at on it, what I've done, how I've maximized making it as lucrative possible. If you want to know how to do that, and if you want to know how to make it really turnkey and super easy, click that link and I'll share that with you. Hey, thanks for watching today's video. Make sure that you are a subscriber, and I'll keep dripping these videos on you every day, especially if you ring that bell, so that I can keep offering that financial knowledge and education that my mentors have passed on to me that I can pass on to you. Take care.